All right, how's everyone doing? I think this superstar panel needs no introduction, and we only have 25 minutes, so I'm just going to get right into it. Lyn, ladies first. I want America to win. I know there's a lot of people of conflicting political ideologies around here, but I want America, and I want Americans to win. And we have this idea of the Triffin Dilemma. We have Bitcoin as a neutral reserve asset. Lyn, how does America win in a world of emerging Bitcoin?
I think it wins by getting out early in front of it. So rather than letting Bitcoin happen to it, you embrace it early so that obviously things like buying it, having a lot of companies located here, and then also trying to recognize that because of the Triffin Dilemma, there are downsides to some of the asset practices of non-neutral reserve assets, like using the treasury as the primary asset, and embracing some of the advantages of neutral reserve assets, hopefully coming back into the system like they were many years ago.
Yeah, so Mark, we were talking backstage about this issue, and you have a much more optimistic take. You don't really view the Triffin's Dilemma as a dilemma at all.
Yeah, I think a lot of people look at Triffin's Dilemma as this dilemma that we have to constantly flood the world with dollars, which is endless debasement, and then hollow out the middle class for this. And I think a lot of people use that sort of like as this an excuse of like, we can't get ahead, we're bound for failure and things like that. But I don't know if that's necessarily true, especially in light of having Bitcoin today. And so it's possible that we have this neutral reserve asset, Bitcoin, that's able to soak up a lot of this extra liquidity that's being created. And so you typically think about this endless amount of dollars that have to be created to continue to feed the world. And that would cause a lot of inflation. Some people might say that causes asset appreciation, not inflation. We're consumers, we buy houses, we buy assets. It's the same thing as far as I'm concerned. But when we have a neutral reserve asset like Bitcoin that can suck up a lot of that monetary premium that may go to houses, might go to asset prices, it sort of allows the system to continue potentially shielding us as consumers from being priced out of homes and being priced out of other assets. And at the same time, being able to use Bitcoin to really outperform inflation.
James, this era of hyper-Bitcoinization, it seems to be upon us. We have BlackRock, we have so many Fortune 500 companies are diving in. So when it comes to emerging nations, how do you see them? We just had Pakistan announce that they're adopting a Bitcoin reserve strategy, which is awesome. How do you see emerging countries, and even third world countries elevating to being able to live up to those standards where we have these superpowers purchasing massive swaths of Bitcoin?
Yeah, it's a good question. When you think back to the last couple of years and these emerging nations trying to figure out a way to get away from the U.S. Treasury, right? So once something happened back in 2022 when Russia attacked Ukraine and we shut off the SWIFT access to them, which is their payment system for the world, and then we seized their U.S. Treasuries, which was, we can all agree, was a monumentally stupid tactical play, why would we do that when we need the entire world to buy U.S. Treasuries? Okay, so that leads us to the BRICS nations getting together, Brazil, Russia, India, China, South Africa, and they're looking for a way to get away from the U.S. Treasury. And so they're looking for a cross-border payment system that would be neutral. And so you have those countries like that who can't really even trust each other, right? So you've got, are they going to go on a gold standard? Then how is that going to work? Are they going to audit each other's gold reserves? You think that Putin's going to let in Shin to come audit their reserves? Likely not. So what's an asset that they can use that would back whatever currency that they're going to use, or what's a currency they could use that would be trustless? Well, it's an obvious answer. It's Bitcoin.
Yeah, so it's great answer. So everyone wants Bitcoin, but we don't necessarily want our adversaries acquiring too much Bitcoin. Bitcoin is for everyone, but how does America get ahead in this Bitcoin arms race, Lyn?
I think by being the best place to do business. I mean, we're already a very large market, and you want as many companies as possible to want a jurisdiction here and to operate here. And going back to James's point with the payment systems, a lot of these country blocks have been trying to do like their own little closed source payment systems for quite a while. Like Enbridge, for example, they have all these little like cross-border CBDCs, and then it's like, if you want to sanction this one, how do we do that? And they never really get any sort of network effect. They never really take off. Meanwhile, the entire time, Bitcoin is standing there staring them in the face as the open source solution while they keep trying their own little closed source ones. And I think the main thing that held it back for a while was, one, it was still fairly small, and two, it's volatile, so these entities would have to hold it, and so there's career risk. If you work at someone's central bank, for example, you're not generally recommending to go buy Bitcoin. But as it kind of gets to a $2 trillion plus market, it's really starting to enter the conversation as all of these like closed source ones have failed to take off. They've stagnated. They're not anywhere kind of further ahead than they were 3 years ago, and Bitcoin is. And I think that's in addition to a reserve asset, it's the payment rails and the settlement rails that they've been looking for, and it's always been there.
I might add to that as well. Yeah, good round of applause. I might add to that as well because certainly there's first mover advantage to having global-based money. So we can see some parallels throughout history. So for example, in the late 1800s, the world was moving to a gold standard. China decided to stay on the silver standard. Silver got devalued. They lost about 30% of their purchasing power, and they sort of fell behind the world order. Maybe another time was after World War II when the US ended up with most of the gold, right? And so we can see these times in history where you have this advantage, this first mover advantage. That's number one. And so the US being able to acquire it in front of other nations. But I think the rails as well, but also being open to innovation. And so not only do we want the Bitcoin to be here, we want all the businesses building on and around Bitcoin to be here. And so if you look at sort of what the US has led with over the last probably 50 years, it's been mostly computers, telecom, internet companies, services, things like that. And I think that innovation, that creation in the United States can continue to keep that here. So it's not just Bitcoin, but it's also the innovation and the products being built on it.
James, do we see AI factoring into this conversation at all? I mean, we have this massive data center worldwide buildup going on. In terms of this dollar stability versus Bitcoin emergence, how does AI factor into that when we're talking about this global issue?
Well, I mean, AI can operate on its own at some level, right? But AI can't, it doesn't have a bank account, it doesn't have a banker, it doesn't have an investment system, but AI could use the payment rails of Bitcoin to execute payments, to receive payments, to build businesses, to operate businesses, and that's really what Bitcoin can do in a way that the US dollar just wouldn't be able to do, or any other currency, any other fiat currency. But something that Mark was talking about, and Lyn, talking about the U.S. getting ahead. Something that is front of mind of all investors right now who are in the Bitcoin space, especially me and Mark and Lyn, where we're all in these VC and hedge funds who are focused on Bitcoin, is the Bitcoin Treasuries. And so the U.S. getting ahead is, part of that is like, look, the U.S. is the largest investment community in the world. We've got the largest market in the world. And so having these Bitcoin treasuries in these companies is also driving that adoption as well very rapidly. And so being a leader in the investment world and being a leader in the markets of that, that's going to help drive that for the US and drive that forward as well.
Yeah, appreciate that. So I'm on a panel with OG, longtime Bitcoiners, and there's been a big conversation about the emergence of these so-called stablecoins. And I was wondering, we live in a world where dollars are moving around the world in massive quantities. If anyone on the panel wants to take this, is there a role for stablecoins, perhaps temporarily, whether Tether, USDC, in facilitating these transactions, or is it not worthwhile?
I think anyone who has sent an international wire transfer can see that stablecoins have a cross-border role. And then also we see in a lot of countries around the world, people do want dollars, and this is another avenue for them to get dollars. So I think that the demand for it, especially outside of the US, is pretty organic. And one way to think about it is that there's a difference between savings and working capital. So for example, many people, you have to match your assets to your liabilities to some degree. Like if you have certain things you have to pay by the end of the month, you can't necessarily withstand the volatility of something like Bitcoin for that 1 month or 3 month period. And so you can kind of think of stable coins like a checking account that people have. We often see it in emerging markets, and it's something that we're often in the US kind of blind to. Most of us here have bank accounts for our various kind of needs. Obviously, you shouldn't hold anything in dollars that you're want to keep on too long because they're going to be melted away. But we have the infrastructure of a bank, and these provide some services like bank-like services to countries where they have less stable financial systems and they want that. So I think there's a role to play, but I think in the long arc of time, Bitcoin is much more valuable.
Yeah, I would add to that. Yeah, I would add to that it is an important role, and to Lyn's point, it's the long arc of time, but it's a really good intermediary step. And so all around the world, we have currencies that are in high inflation, double-digit inflation, triple-digit inflation, and those people desperately need dollars. And to the point Lyn made, because the Bitcoin is so volatile still today, it's not really good for short-term money. But even more than that, we have an immediate need for this. And so with payment processing, for example, myself personally, I got deemed a high-risk merchant. We're paying 5% processing fees. For real high risk, they're paying 8% processing fees. It takes 3 to 5 days to get the money. The merchant wants to hold 50% of it in a reserve for 3 months, 6 months of chargeback time period. And so it's really inefficient and it's really expensive. And so stablecoins can solve that right now today. So not just for the rest of the world, but even for us right here. I also think that it's a gateway drug because there's still a lot of people who think Bitcoin is a scam coin. They're still skeptical on Bitcoin. And so what it does is it introduces them to a digital currency that they might trust, maybe a digital dollar token that they may trust from their bank or something like that. And they start to get to use this. They see it in their wallet, and then maybe they see it in their wallet next to Bitcoin. And then they wonder, why does this dollar token buy me less goods and services in the future, and the Bitcoin token buys me more? And so I think it also leads to that eventual evolution to Bitcoin.
All right, so I'm gonna talk about the other side of this, which is the United States government needs stable coins right now, and it's going to prolong the US dollar being the global reserve currency. And the reason for that is that, as we were saying in the beginning of this, is the US government and the Treasury needs the world to buy our treasuries because we operate in such deep fiscal deficits. We have no choice. We need the world to buy these. This goes to the Triffin Dilemma, right? So, but this is going to, the stable coins allow for everybody to buy treasuries basically, because when you buy a stable coin, the stable coins buy the treasuries. It's just like a money market account. And so that's going to just prolong this and open up the whole world to buying US treasuries. And it doesn't matter if you're unbanked in a small African nation. If you have an internet connection, you can get onto an exchange and buy a stable coin, a USDT or USDC. You just bought treasuries, which is what the U.S. government needs, and they're talking about it, and they're working on this bill because they need this to continue this charade that we're playing. And quite honestly, just like you said, this is the U.S. dollar is, like Greg Foss likes to say, it's the cleanest shirt in the dirty laundry, but all the other currencies are debasing a little bit faster. But make no mistake, the U.S. dollar is debasing rapidly too.
So let's talk timeline. I think this entire panel, correct me if I'm wrong, agrees that Bitcoin as the global reserve asset is inevitable. So whoever wants to take this first, what does the timeline look like where we're, these poorly executed fiat currencies are dissolving, but when do, we come for the ultimate behemoth that is the dollar?
I tend to think it'll take a while, but it'll be growing the whole time. I mean, we're looking at right now, Bitcoin's a $2 trillion asset. the whole dollar system, depending on how you measure it, so if you look at the broad money supply plus the whole bond market, and the global fiat market, we're looking at hundreds of trillions of dollars. And what's challenging is there's a network effect because unlike Bitcoin, where there's not a lot of Bitcoin-denominated debt, in the fiat system, there's a lot of debt denominated in those fiat currencies. So that represents inflexible demand for those currencies. And then people have to kind of save in the asset that they owe at the end of the month, or that they owe on a bond contract or a loan or something. So I think this process is going to continue to take a while, but that doesn't mean that it doesn't move pretty quickly in any given 3 to 5 year period. Like if when we were at some of these conferences 3 to 5 years ago, the network was much smaller. It's gotten a lot bigger since then, but it still has a long way to go. So I think there'll be another 3 to 5 year period. It'll still, even if it's 3 times or 5 times bigger than it is now, it'll still be pretty small on the global scale. But then give it another multiple after that, and actually at that point you really start to challenge some of the biggest in the world. Right now, Bitcoin is climbing the market cap level, like it's getting nearly as big as some of the biggest companies in the world. So some of the biggest companies in the world are over $3 trillion in market cap. Bitcoin's around $2 trillion. So one more doubling, and it's basically bigger than any company in the world. Give it another 10x its scale, and it's kind of rivaling gold. Once it crosses, 5-6 trillion, it's basically bigger than the monetary base of other countries in the world. And it's going to take years, but it's so far at 16 years in, and it keeps churning and getting higher and higher.
I think really the significant move would be when Bitcoin starts to get allocations out of bond portfolios. Once you start seeing investment managers and individuals moving their money out of bonds and into Bitcoin, that's kind of like the first step to me to this gateway. And the reason for that is that they're recognizing what I was just saying before, which is the dollar's being debased. It does not matter if you own a bond that's giving you a 5, 6, 7% return. You're still making a negative real return on that. And so once people start to realize that across the board, I mean, this is far and wide, not just the BlackRocks and the Fidelities of the world, but all of their customers and all of the other major banks and institutions, once they start realizing this, especially like pension funds, because pension funds have to own bonds in order to meet future obligations. But once they realize that these bonds are not helping them meet those obligations, and they start reallocating into Bitcoin, that's kind of like the first big step to get to that reserve.
The way I would look at it too is I don't see it as some imminent event that's coming. And so a lot of times, especially in the gold community, you hear a lot about this imminent event where the dollar dies, the end of the dollar is coming. And rather than looking at it as an event, I look at it as a process. And so what we're seeing is the long drawn out process of the dollar losing its value. And we're seeing other assets like Bitcoin rise. And so we have this long process. Now, what is this eventual date that will eventually declare that Bitcoin has achieved this level? I would say when Bitcoin is now sort of this global unit of account. So when we start to price things globally in Bitcoin. And so when I look at like these 50-year technological revolution cycles and how financial capital is allocated throughout these, and then we can use like an S-curve of adoption. When you overlay these charts, I think by sometime in the 2040s, 2040 to 2050, by 2050, I think Bitcoin will be the global unit of account, and I guess that's when I'd finally declare it's the reserve asset.
I think a really important signal too is the fact that Bitcoin is like over 100,000, despite the fact that interest rates are 4 to 5%. If you would have asked people that 3 years ago, a lot of people were saying Bitcoin is a zero interest rate phenomenon. It only makes sense when interest rates are near zero. And one of the new signals that happened this time is that despite the fact that the Fed got about as aggressive as they could, they kind of raised interest rates as quick as they could until they started blowing up the banks. That was kind of the ceiling that they ran into. And gold and Bitcoin had a little bit of a headwind temporarily, but then they just kind of shrugged that off. So gold soared from 2,000 to 3,000 an ounce, and Bitcoin's well over 100,000, despite the attempted hawkishness of the Fed. And this is kind of the first cycle where that's happened. I would argue that it's because we're in fiscal dominance. That's the thing I keep emphasizing. But that's a new era going forward, and it's a different type of trading regime than it has been over the past, the prior 15 years before then.
If I may take Jordan's job for a second, I'll go back to Lyn. What do you think about the political climate shift as well? Because you might say that the Biden administration was somewhat suppressing the climate for Bitcoin, and maybe there's been suppression for the last 4 years of the administration that's now pivoted, and so maybe there's a lot of catch-up that is happening right now?
Yeah, I mean, I think we saw a big price jump from the ETFs, and then we saw another big price jump from the election outcome. I mean, that's a real thing. When especially like portfolio managers, when they're looking at this, there's some part of them that's thinking, what is the probability that the U.S. gets really aggressive on Bitcoin? So they have to take into account that possibility in their price predictions, especially if they're running assets for their clients and they have a fiduciary duty. And when you have an administration that's more favorable to it, at least kind of in the eyes of the market takes out some of the tail risks. Either way, I mean, it's a global asset, so I think it's able to shrug off a lot of friction. But it doesn't mean that friction doesn't exist. And so if it's harder to operate businesses, if it's harder to have certainty about it, if it's hard to even get a bank account if you're a Bitcoin company, I mean, that's been a long-standing issue. And I do think that climate really does matter. And then in addition to the seeing it pop up in different sovereign wealth funds around the world and seeing all these different Bitcoin treasury companies occur in multiple different currencies around the world, the accounting changes were also a pretty big deal. So I think there's a lot more tailwinds going forward.
Yeah, and I think that President Trump added rocket fuel to those tailwinds with his pro-Bitcoin policies. So in America, we have a crisis. You can attribute it to the Triffin's Dilemma or however you want to theorize about it. But we're not making enough, especially in the national security space, and it leaves America particularly vulnerable from a national security perspective, whether that's medicines, whether that's strategic elements. We're importing so much stuff. And there's a debate to be had about whether some of it is necessary. Like, do we need to build pencils? I don't think so. But there are some things that are not made in America that I think need to be made in America. How does Bitcoin solve for that?
I don't know if Bitcoin solves that specifically. I think in a roundabout way, potentially. I think when you look at some of the things, for example, the rare earth elements that you mentioned, I mean, those are strategic assets that we should have here, and we rely on China for those elements. Now, the US is the second largest producer in the world. We just don't produce enough. But a lot of that is because of politics, and there's EPA regulations and things like that. So I think maybe in some way, in a long roundabout way, Bitcoin sort of limits the role of the government by sort of potentially putting some constraints around the fiscal spending. Maybe some of that starts to lower the regulations, at least constrain the regulations, which then allows some of that industry to flourish, potentially number one. I guess maybe number two, yeah, I don't know, maybe number one, I think it's just kind of constraining the government, because I think in some of those instances, we're really fighting ourselves. I don't think we're talking about bringing T-shirts and sneakers back to the US. It's really those key things, and it's really a political climate.
Yeah, James?
I mean, if you think about the biggest problem the U.S. has, right, is that we're seeing the whole world wake up to the fact that the U.S. dollar cannot be trusted. That's the biggest issue that we have. And when you then look at Bitcoin, Bitcoin is trustless. It doesn't need to be trusted, and that's really what will drive forward in the innovation here eventually over the long run. Is that you have that base asset or currency that you can now trust without worrying about it being debased, it being seized, or it being frozen or locked away from you. So that's really that's a big deal for the U.S. and embracing that and pushing forward on it quickly is that's really important in my opinion.
Appreciate it. So, these conversations are happening in DC all the time, and how do we negotiate this idea of being a relatively free-floating currency and also trying to bring manufacturing back to the United States? And Bitcoin's role in that and is complex, and I think that's right, that a lot of it lays at the fault of policymakers. Lyn, you talk to these people all the time. What do you advise them to do in 30 seconds?
I think by trying to maximize productivity, because one of the downsides that can happen to the dollar is that as Bitcoin kind of reintroduces, like Bitcoin and gold, because it's also happening with gold around the margins, when they kind of come into the reserve asset mix, it displaces the dollar, which risks being inflationary. Some of the economists that advise the president are aware of that, and one of their answers for it is to try to be as productive as possible. So try to have energy flowing, no energy disruptions, try to have business be as smooth as possible, and that's the damage control that they can do as they kind of make this transition.
All right, James Lavish, Mark Moss, Lyn Alden. I'm Jordan Schachtel. Thanks so much, everyone.